Well, word that China's trade balance plunged into the red last month sent the commodity-heavy TSX into the red as well. For a closer look at what's moving Canadian markets, we're joined by Diana Avigdor. She's Vice President and Head of Trading at Barometer Capital. So nice to have you here in person.
Thank you very much.
Let's talk a bit about what's not happening in the markets right now. Yeah,
frankly, I feel like I haven't had any new data points in the last few weeks. Markets really haven't moved. A little bit up, a little bit down. We're searching for stories. The Greece situation has been contained, so that's excellent. You would have thought that markets would break up and break out and everything would be excellent after the Greece situation, the bondholders and the PSI resolution. That didn't happen. It was just as quiet and lackluster after the announcement. We had some great non-farm payroll numbers on Friday. You would think that would be a little more a trigger. No, nothing. We're still kind of circling the same type of levels, and the volumes are not there. And we have March break, so lots of activity is going to be muted this week. And, we're looking at what's making new highs and what's making new lows. And frankly, the defensives are making new highs, right? We have utilities, we have pipelines, all those making new highs. And so those are the defensive traders making new highs, and the risk-on type of investment is not so much. So there is a bit of fear out there still, despite the volatility, the VIX index being subdued. We're looking at, we're saying people are complacent, but I was talking about the Credit Suisse fear index, barometer.
Actually, I think we have that, so let's bring that up. Let's take a look. So first off, tell me why that you look at the Credit Suisse Fear Barometer, and do you like this more than the VIX?
Well, there it is. So in any given time, there is, as a trader, and a short-term focus, you want to look at what's priced into the market and what the next catalysts are. When you look at the VIX at this time, you say, oh, there's so much complacency, but this shows you that there is no complacency, there is just no volatility. So the VIX is low, there is no volatility, but there is fear out there. This index is talking about the fact that it costs 10 times as much to buy a put than it does to buy a call of equivalent out-of-the-money.
And just telling people, so it costs more, you need to pay more to sell than it is to buy.
That's right. So people are willing to pay 10 times more to protect themselves against a downturn in the market than they're willing to pay to buy more upside through a call. Because when you buy a call, of course, you're buying the right to buy, which means that you want the market to go up. And you buy a put, it's the other way around. So they're willing to pay 10 times as much for insurance to insure their portfolios. That, to me, spells a little bit of worry that markets are at some level where we've had a good run. Maybe you want to protect some, and if it breaks out, sure, you take that off, that protection off, and move on.
We were chatting with this in the break as well, that the volume's just not there. And I've heard this from everybody, and I know the Globe talked about it too, but is that your experience too? There's just not as much going through?
There's not much going through at all.
Is that permanent? Is this the new normal? Are people out of equity markets?
We don't know. But, certainly the last 3-4 years have forced people to reassess their risk tolerance. People think that they have risk tolerance, that it's usually higher until the risk actually hits their portfolio.
Then you're like,
they say, I wasn't as tolerant as I thought. This hurts more than I thought. To some degree, I think that some people that should have never been in equity markets will probably not come back for a long time. It's going to be a lot harder to convince them to come back. But we'll see. In addition, there are some market structures. You and I spoke about this before. HFTs, high-frequency trading, market structure issues. Regulation is coming online. I think the low volatility is probably muting the HFT trading. ETF trading as a percentage of volume is also low because of the low volatility. So when people buy ETFs,
they're hedging against risk.
You have to buy the and there's actual activity in the stocks.
Got it.
Underlying those.
They have to buy
ETFs.
the stocks to match the ETF.
Exactly. So you don't have the ETF, you don't have the underlying activity in the stocks. So it's all kind of circular.
Is there a magnifying effect in that? I mean, when people buy, does it create volume that's not there, is what I'm trying to say? I mean, is it I know it's real, but...
It creates volume, but maybe not liquidity for larger trades. It creates the numbers, but the quality on the number. Can you actually can you actually put through or invest in, you know, put on a weight at a price without impacting? Right. Your price impact and slippage is just very big. So you do have the numbers, but
it's not
really there. You know, this dates me, but if you remember doing NASDAQ 10 years ago, blocks were put on twice. Once, you know, the spread was an eighth, and once it was put on a bid, once in the and the volume was doubled.
Right. But
the
what
numbers
was real
were there,
wasn't.
but what was real? Sometimes even tripled. So there is volume and not so much liquidity when you factor that in, and that right now we don't have either.
Interesting. Let me ask you, Fed's announcement tomorrow, is that going to, I mean, again, we've had the non-farm loan, we've had the China stuff, we've had the Greek resolution. Is that going to?
I think it's important, I do, because to the extent that the Feds are going to acknowledge, to what extent is the Fed going to acknowledge the North American economic recovery as it relates to jobs and labor market and the housing? Housing stocks have been very strong lately. And that is going to support or not the U.S. dollar. And as we know, that is very important to our commodity complex. And when you superimpose that over the China growth issues, I think we need to, and the geopolitical concerns out of Iran as it relates to oil, I think all those issues together are what's holding our commodity complex where it is right now. And resolution of these issues are going to determine where that next trade goes, down or up.
Great to have you here.
Thank you.
Diana Avigdor, she's Vice President and Head of Trading at Barometer Capital. All right, stay with us. When we come back, one last look at the markets before the closing bells in just about 3 minutes' time. We'll be right back.